Financial freedom doesn't come from luck. It's forged through long-term thinking, unwavering discipline, and strategic decisions. In a world flooded with noise and emotional chaos, only those who understand real value, master their emotions, and act with clarity can build lasting wealth. This is not a shortcut to quick riches. It's a blueprint of mindset, guiding you through time, crisis, and critical moments. Every principle ahead is backed by logic, not hype. If you're tired of chasing and ready to build, you're in the right place. You're about to hold the map that leads to enduring financial independence. Let's unlock 10 powerful principles that will forever change how you invest. True wealth is never accidental. It's the result of strategic thinking, built with intention and reinforced by discipline over time. Those who achieve financial success understand that investing is not about quick wins, but about staying power. They don't chase headlines or hype, they construct strong systems where money compounds quietly. Wealth doesn't come from one big moment, but from many consistent decisions. It's not about timing the market, but about time in the market. Long-term thinking isn't a luxury, it's the foundation. Those who embrace it don't just grow richer, they build stability that lasts through any storm. Long-term thinking is more than a financial method, it's a mindset. Successful investors aren't shaken by market noise because they understand short-term prices don't define real value. They ask better questions. Is this asset truly valuable? And does it align with my long-term plan? They treat investing like building a house. Start with a solid foundation, construct patiently, and avoid rushing. They don't fall for fast profits because they're focused on future impact. Every choice is a brick in their financial fortress. While others get distracted, they stay locked in, trusting the slow power of time and intention. Those who understand time's power don't count profits daily. They count growth over decades. They don't ride waves, they plant forests. Every investment is nurtured, reviewed, and respected like a living asset. Patience becomes their ultimate edge. When volatility strikes, they don't panic. They already expected it. They're not driven by the need for instant results, but by the certainty that steady strategy wins. Wealth doesn't belong to the reactive, it belongs to the resilient. It's not found in a lucky spike, but in the courage to commit, the wisdom to wait, and the discipline to repeat it relentlessly. Every financial crisis is both a test of psychology and strategy. When the market bleeds red and headlines scream collapse, most investors panic and sell. But the few with clarity see golden opportunities. Assets don't lose value because of fear, they get mispriced by it. That's where disciplined investors step in. They're not buying just because something is cheap, they're buying because value exceeds price. Chaos separates the fearful from the focused. And those who keep a steady hand amid storms often walk away with treasures the crowd was too afraid to touch. True opportunity lives where panic blinds the majority. The biggest opportunities are always disguised as fear. When markets decline, media multiplies the panic and the masses retreat. But those who understand the cycle stay calm. They observe, analyze, and move against the tide. Cheap doesn't mean worthless, it can mean undervalued. Smart investors don't wait for perfect timing, they make the timing perfect by acting with insight. While others see crisis, they see clearance sales. Long-term returns are often born from moments of short-term terror. Their edge isn't prediction, it's perspective. Where most people freeze or flee, they lean in with logic and long-term conviction. When the market turns bloody, strategic minds see open doors. They don't react impulsively to every dip. They stick to the plan they built in calmer times. They research businesses, study financials, and assess long-term potential. They're not hoping for a quick rebound, they're planting seeds for future harvests. Storms are temporary, but assets bought during storms often yield the richest fruit. Wise investors don't fear red, they understand it's the prelude to green. While others sell their future for comfort today, they double down on tomorrow. Wealth rewards those who act with courage when everyone else is driven by emotion. Not all assets make you rich. Some only store money, while others create it. Productive assets like businesses, real estate, and growth-oriented stocks actively generate value. They produce profits, reinvest earnings, and expand their impact over time. That's what separates preservation from creation. If your money isn't working while you sleep, you'll spend a lifetime working for money. The smart move is to invest in machines that multiply. Productive assets aren't flashy, they're functional, and function builds fortune. Choose the assets that breathe, evolve, and work relentlessly, so you can build wealth that outlives both effort and market noise. A productive asset operates like a financial engine running non-stop. When you invest in a business with strong fundamentals, it earns money and reinvests to grow even more. This compounding effect transforms a single dollar into a wealth generator. In contrast, gold, collectibles, or cash under the mattress may retain value, but they create nothing new. Holding them is like locking your money in a vault. It's safe but stagnant. Real wealth requires motion. Investing should not just preserve, it should produce. The most powerful assets are those that grow without you micromanaging them every day. That's real leverage. Picture planting a seed in fertile soil versus locking it in a metal box. The seed in soil grows, bears fruit, and multiplies. The one in the vault stays lifeless forever. Productive assets are financial seeds. They thrive in dynamic environments and compound your future. Look to sectors with natural growth: technology, healthcare, real estate, innovation-driven industries. And don't rely on just one crop. Diversify within productivity. Spread your investments across high-potential fields, and let nature and economics do the heavy lifting. Growth isn't about chance. It's about planting in the right places and allowing time and performance to bring your wealth to life. Compound interest is the most underestimated force in personal finance, and the most powerful. It's not a trick, it's a time-driven engine for wealth. When your gains are reinvested, they generate their own returns. Over time, this turns a linear path into exponential growth. A small investment, if left untouched and nurtured, can become a fortune. You don't need a miracle, you need time and consistency. Compound growth doesn't reward speed, it rewards patience. The ones who win are rarely the fastest. They're the ones who stick with a simple, powerful process long enough to see the magic unfold in full force. Compounding is like a snowball. It starts small, barely noticeable, but as it rolls down a long enough slope, it grows massive. The problem is, most people give up before it gains momentum. They're too impatient to witness what time can do. The winners aren't the biggest investors. They're the ones who start early and stay committed. Start small, stay steady. Let time do the compounding. It's not about how much you invest, it's about how long you allow it to work. Wealth doesn't explode overnight. It unfolds slowly, invisibly, and then all at once, for those who dare to wait. A $1,000 investment earning 8% annually becomes over $10,000 in 30 years, without adding another dime. That's not fantasy, it's math. But compounding only works if you don't interrupt it. You must resist the urge to withdraw, to react, to doubt the process. The compound effect demands consistency, not perfection. Those who understand it never ask, "When will I profit?" They ask, "Have I let it run long enough?" Time is the most honest business partner you'll ever have. It never lies, it just needs space, and the more you give it, the more it returns, quietly, faithfully, and powerfully. The market is always loud, and that noise is the enemy of long-term thinking. Sensational headlines, panic-driven analysis, and fear-based forecasts are designed to trigger emotion, not help you invest wisely. Smart investors don't react to hype, they respond with clarity. They listen to data, not drama. They train themselves to ignore the chaos and focus on their strategy. In a world screaming for attention, silence becomes a superpower. Clear thinking isn't found in breaking news. It's built through discipline and distance. Mastering the art of ignoring noise may be the single greatest edge any investor can develop over time. To block out noise, you need a compass, your long-term investment plan. When the market rises or falls, you don't guess, you follow your strategy. Ask this: has the company's value changed? Instead of, what's the news today? Real investors don't let headlines steer them. They stay rooted in principles. Just like a marathon runner doesn't stop for every gust of wind, long-term investors stay the course even when storms come. A good plan doesn't just tell you when to buy, it reminds you why you started. That why is your anchor in every storm and your guide in every decision. One of the most valuable skills you can build is distinguishing between noise and signal. A signal speaks to real underlying value. Noise is everything else. Every investment decision must pass through a filter of logic, not emotion. When you learn to mute the market's volume, you begin to hear the quiet voice of strategy. That's where clarity lives. That's where consistency begins. Every investor faces storms, but those who stay focused sail farther. Ignore the noise. Follow the signal. Long-term success belongs to those who trust the math, respect the process, and stay immune to market theatrics. In investing, more doesn't mean better. A portfolio scattered across dozens of mediocre assets creates the illusion of safety, but often delivers weak returns. A concentrated portfolio of high-quality assets, however, is like a championship team, lean, focused, and built to win. It's not about how many investments you hold, but how well you understand each one. Strength isn't found in numbers, it's found in conviction. The best investors don't diversify blindly. They build portfolios like architects, intentional, precise, and designed for endurance. Less clutter means more clarity. In finance, as in life, fewer but better often wins the long game. Choosing quality means investing in businesses with durable models, visionary leadership, and consistent profitability. These assets aren't just impressive, they're reliable. While they may not be cheap, their value compounds over time. They don't need daily monitoring, yet they continue delivering year after year. Owning quality means sleeping well at night. It's not about finding the next hot stock, it's about holding the proven winners that endure through cycles. A single exceptional asset can outperform a dozen forgettable ones. Quality isn't flashy, but it's faithful. It sticks around when volatility hits, and that alone makes it priceless in the long run. Treat your portfolio like a curated gallery, not a messy storage room. Every investment must earn its place. If it doesn't serve your long-term goals, it doesn't belong. Don't spread your capital thin chasing what-ifs. Focus it on what works. Invest in what you understand, believe in, and are willing to hold through turbulence. Quality assets weather storms and emerge stronger. The goal isn't to own everything, it's to own what matters. A great portfolio isn't packed, it's purposeful. And in a world that rewards focus, a clean, conviction-driven portfolio becomes your financial unfair advantage. In investing, your biggest enemy isn't the market, it's your own emotions. Fear makes you sell at the bottom. Greed pushes you to buy at the top. These extremes destroy more wealth than any recession. Success doesn't come from reacting fast, it comes from reacting right. Emotional discipline is the ability to stick to your strategy when everything inside you says otherwise. It's the skill of staying grounded when prices swing wildly. Maintaining your mindset is the ultimate wealth protection. You don't need to outsmart the market, you need to outlast your impulses. Control emotions, and you take control of outcomes. Think of emotions like crashing waves in open water. Without a compass, you drift aimlessly. Your investment plan is that compass, built during calm seasons to guide you through storms. Define your risk tolerance, your reason for investing, and your time horizon before chaos hits. When markets shake, revisit your plan, not the headlines. Investing isn't about excitement, it's about execution. Your power lies in preparation. Discipline isn't natural, it's intentional. Every decision anchored in planning keeps you from reacting out of fear or fantasy. Long-term wealth isn't about perfect timing. It's about consistently honoring your strategy no matter the weather. Emotional discipline doesn't mean feeling nothing. It means not letting feelings make decisions. Especially during volatile markets, this matters most. Those who can't control their emotions will be controlled by market drama. Meanwhile, those grounded in purpose adapt without collapsing. When turbulence hits, they don't abandon the ship, they adjust the sails. They don't ask, "What's happening now?" They ask, "Does this align with my long-term plan?" Investing success isn't about speed, it's about strength. Stay calm when others panic, focused when others chase hype. In the long run, composure is not just a trait, it's a financial superpower. Investment costs are like tiny leaks that slowly drain your wealth. They seem harmless. A 2% annual fee doesn't sound like much, but over decades, it can devour nearly half your returns. That's why smart investors obsess over fees. Every dollar you save on costs is another dollar you keep compounding. Winning isn't just about making more, it's about losing less. Hidden fees, recurring charges, and unnecessary management costs quietly erode your future. Awareness is power. Know where your money is going and keep it working for you, not for someone else. A strong offense builds wealth, but a great defense protects it. You can't control the market, but you can absolutely control what you pay. Prioritize index funds and ETFs with ultra-low expense ratios. Avoid actively managed funds that come with hidden fees, commissions, and entry-exit costs. What seems minor today can add up dramatically over time. The longer your investment horizon, the bigger the impact of cost drag. Saving just 1% annually in fees could add 6 figures to your retirement. Being cost-conscious isn't stingy, it's smart. Long-term investors play the efficiency game. They don't pay for flair, they pay for performance, and they know exactly what every dollar is doing. A great portfolio isn't just profitable, it's protected. Choose platforms with commission-free trades. Avoid advisors who take a percentage of everything. Read the fine print before you sign. Even small service charges stack up over the years. Make fee reduction a built-in habit, like rebalancing or contributing monthly. The goal is not just to grow wealth, but to stop the silent erosion of what you've built. Wealth isn't only created, it's preserved. And the easiest money you'll ever earn is the money you never paid out in wasteful fees. Let your capital grow, not leak. Every dollar saved is a seed multiplied. Success leaves clues. The greatest investors don't operate on emotion, they follow principles. They don't chase trends, they build frameworks that endure. Rather than copying every move they make, study how they think, how they analyze risk, and how they stay disciplined. Modeling their mindset gives you flexibility to adapt while maintaining clarity. It teaches you how to make decisions based on value, not noise. You don't need to mirror their portfolios, you need to absorb their thinking. Learn how they process information, manage volatility, and resist panic. Mastering their mental models gives you an edge the average investor will never access. These leaders have faced crises, bubbles, crashes, and emerged stronger. Why? Because they didn't react emotionally. They acted strategically. They demanded a margin of safety, avoided hype, and focused on fundamentals. When you internalize that approach, you stop playing defense and start building intelligently. You stop asking, what's hot right now? And start asking, what's undervalued and resilient long term? Wealth isn't built by those who follow the crowd. It's built by those who understand value deeply and stay consistent when others fold. Learn from those who've already endured the storms. Their wisdom isn't theory, it's forged through battle and built to last. Studying great investors isn't about shortcuts, it's about rewiring how you approach money. It means developing good habits, building resilience, and staying aligned with timeless principles. When markets wobble, you won't panic. You'll remember what the greats would do. That mental rehearsal sharpens your instincts. You begin investing not from fear or excitement, but from logic and vision. Their legacy becomes your compass. Every choice you make starts echoing their mindset. Rational, focused, patient. Greatness isn't copied, it's cultivated. And when you build your strategy on wisdom that stood the test of time, you stop guessing and start growing. Wealth isn't just about numbers. It's about building a system that generates income even when you stop working. It's about freedom of time, choice, and control. Strategic investing means you're not only growing assets for yourself, you're laying foundations for your family, your future, and your influence. True wealth isn't measured by your bank balance, but by the impact you leave behind. When your money works without you, when your decisions echo through generations, that's legacy. It's not about building fortune overnight. It's about designing a life where your values, discipline, and strategy continue thriving long after you've moved on. Creating a legacy means thinking beyond now. You're not planting a seed for quick fruit, you're cultivating a forest for decades. Long-term thinking helps you ignore the get-rich distractions and focus on long-lasting growth. Your portfolio should reflect this. Built with purpose, not impulse. Every investment is a message to your future self. Will it say I chased hype or I built value? When done right, your portfolio becomes more than money. It becomes proof of vision and conviction. Each decision becomes a brick in your financial structure, and that structure stands as a monument to strategic thinking and personal integrity. A legacy isn't just about wealth, it's about wisdom. It's passing down not only assets, but the mindset that created them. Let others inherit principles, not burdens. Let them inherit discipline, not dependence. The most powerful legacy teaches others how to win long after you're gone. Every step you take today can model freedom, foresight, and responsibility. That's what legacy really means. When your portfolio is built with clarity and purpose, you're not just investing in stocks, you're investing in character, in future leaders, in generational change. That's a wealth that doesn't fade, it multiplies across time. Wealth isn't a destination, it's the path you walk with the right mindset, strong discipline, and long-term strategy. Investing isn't a game of speed, but a journey of intention. The world rewards consistency, not chaos. When you silence the noise, trust value over hype, and stay patient through storms, you don't just grow rich, you grow free. Each decision you make today is a blueprint for the legacy you leave tomorrow. Wealth isn't built in a rush, it's built with purpose. And the most powerful investment you'll ever make isn't in the market, it's in how you think. Commit to the process, stay the course. Your future self and generations after will thank you for it.